You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and first-timer on Ron Siegel Radio, Cory Neubauer, Roy Palacio Insurance Agency. Welcome.
Thank you, Ron. Thanks for having me. I appreciate it.
Glad to have you with us. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or a plan to save you money, I personally work with you even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. Now, you know something, Josh, I'm going to go off script right here because it's going to cause me trouble, but I don't care. I have fun. Today's National Cashback Day, and it's also National Housewives Day. Now, if you're married, and I am 35 years into a life sentence, so Cashback Day, when I give my money, my money, when I give my wife money, there's no such thing as cash back. That's just non-existent. Doesn't matter, but I digress, and I'm sure that I'll get some hate mail over that one, but that's a different story. Men make dinner day, but you can't barbecue? What's that all about? I'm not sure that my wife or my family would want to eat it if it wasn't just straight barbecue. I'm really good at making reservations. I can do that real well. And National Sandwich Day, Board and Brew. I like Jersey Mike's too, but Board and Brew, they just put a little extra meat on the sandwich. So maybe I'm a little biased to Board and Brew, but we'll celebrate there. Let's take a look and see what the markets are doing today, being that we got the jerk Powell yesterday, came out and wanted to screw everything up.
Such an idiot.
Now, how did this guy get hired twice? I mean, I get it that Trump hired him, but then you get, well, Biden doesn't know what he's doing anyway, but he goes and rehires him. Now, the inflation, we all know it's transitory. He told us that. So why is he increasing interest rates so much? Maybe because he didn't understand that inflation is not transitory. So yesterday, he increases interest rates. Once again, the board did, but he's the mouthpiece for him. That interest rates go up 75 basis points. Now, we already knew that was going to happen. We got that from the mole, Nick Timmeros. So we knew that was going to happen. And the market said, okay, we get it. And the Federal Reserve statement was very positive that they're doing this. They understand what they're doing. They know the effect it's having on the market. They understand that they've got to slow down the economy. And then he gets into the press conference. And once he started talking, the market started tanking. The market goes down. It was up 400 points. It ends up down 500 points. So just from him talking, it goes down 900-point swing. Think about that. Because he doesn't know what the heck he's doing. Right? The Federal Reserve always overdoes it. And then he comes out and says, well, we know we're going to overdo it. We're planning on it. Again, I say, what an idiot.
Such an idiot. Such an idiot.
Right? I mean, it's amazing that he knows he's an idiot and he tells us that. It's a delayed effect when you raise interest rates. And so many times the Federal Reserve, they raise interest rates. What do they raise it? 1/4 or 0.5%. This Federal Reserve raises it 0.75% over and over and over again. And it doesn't affect anything right away. It's long-term effect. So what does that mean for you? Well, what that means for you is that you're going to get to suffer. You're going to get to have some pain. And because you are a listener of Ron Siegel Radio, one of the things that I wanted to do with you this morning is have a little bit of a chat about how you can protect your family. So we're going to give you a little workshop. The Fed rate hike, how this hike will impact your family. That is our subject of this little conversation. So what is that going to mean for you? What are you going to see from it? And if you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you can actually see a little bit of a slideshow that we've got here. So I can walk you through what this Fed rate hike means to you, how it can be beneficial for your family in 2023. Next slide, please. So let's take a look at this. The Fed rate hike does not directly impact mortgage rates. Over time, it will, and sometimes mortgage rates actually go the opposite direction. The Fed funds or Fed hike will affect credit cards if they're an adjustable card. They will affect home equity lines of credit. So let's take a look at the next slide. What do I mean by that? So here's the issue. If you want to look at this, so we lost something there. Home equity lines, and I don't know what happened to our numbers on there, Josh, but the number on the equity line that we have here, the data is not showing up. But what I want you to understand about this is the numbers here, if they showed up, would be showing you what prime rate is doing over time. And we went from like 3.5% prime to right now we're at like 7.25% prime. Now, your home equity line of credit, maybe you're at 7.25%, but for the most part, you're going to be higher than that. You're going to be prime plus something, and that's why your rate changes all the time. Let's take a look at what that means for you. Let's take a look at the next slide if we can. So, if you can, Josh, can you slide in on this a little bit, or whatever they call it, enlarge it, because my old eyes can't see. So what we did here is we looked and we said, okay, we've got $60,000 line of credit. If you took this out and we're just using a base rate here, we're just using the prime rate. If it was at 3.5%, where prime was at the beginning of the year, maybe it was even a little lower, well, you're looking at $175 a month payment. Well, that same home equity line of credit now with a 7% prime rate is $350. For some families, that's very painful. I don't know anybody that likes it. But let's take a look and see where we go from here. Next slide. We're going to take a look at it, and we're going to see. We went one too far. Maybe we went too far. I'm losing it. Plan for 2023. There we go. Okay. So let's say what are we going to do for 2023? We have a couple of different options. Plan A, we do absolutely nothing. We wait it out. Okay, that's a plan. Doing nothing is something. Now, what do we look at for Plan B? Plan B is to recession-proof your family. We've been talking about this for a while, even before the Federal Reserve did this, but how do you recession-proof your family? So Plan A, you've got no credit card debt, you've got no equity line, you've got reserves in the bank, you've got a recession-proof job. Under Plan B, you've got credit card debt, you've got a line of credit that you're using. No reserves in the bank. Shame on you. And you might even have a risk of losing jobs because the Federal Reserve has told us they know that's going to be a consequence of what they're doing. So there's your options. There's where you might be. Next slide. And you take a look at it. Plan A, again, we're doing nothing. Plan B, again, you've got credit card debt. You've used your equity line. You got no reserves in the bank. High job loss in the recession. What are we going to do about it? We've got two steps here. Under Plan B, when you have a lot of credit card debt and you've got your line of credit maxed out, generally that means you're going to have low FICO scores. The credit card debt affects your FICO. The credit line affects your FICO. Talk to our friends at creditsanitizer.com. Get that free credit report audit. Job loss means you cannot refi. If you don't have a job, no refinancing. Cash out does require some equity. You're going to have to leave behind 20% equity. A lot of families have that equity right now, so we don't have to worry about that. Next slide, please. So step one, refinance right now. And you say, oh, but Ron, the interest rate is so high, and you're in a 3.25%, 3.5%, 4% interest rate. I know I got that for you. or somebody got you that. It does not matter, because what matters is your household blended interest rate. Put all of your debts together and weighted and see what your interest rate is then. But in step one, we're going to get rid of all that credit card debt and the equity line of credit. It's considered a cash out refi. Above the interest rates that are high right now, it's going to even be higher, because that's the highest rate that we have on a home loan is a cash out refinance. But we don't care about that, because we've got a plan going. The rate and term will be lower. Now, we're going to pay off all that credit card debt. We're going to pay off the home equity line of credit. That means your FICO score is going to increase. You're going to have a higher FICO score, because we're funding the emergency account. We're getting you out of debt. We're using some of your equity to make your life better. Now, you're going to have to leave 20% behind in that cash out refinances. And guess what? Property values have not dropped yet. Now, are they going to drop? I don't know. But if they do and you got the money out, you don't have to worry about it. And you can do that refi right now, because you haven't lost your job yet, and I hope you don't. Now, what is step two? Well, next year in recessions, historically, I can't predict the future, but historically, interest rates always have dropped in a recession. They always go down in a recession, not reception, but in a recession. So if that happens again, as it has in the past, what are we going to do? We're going to do a rate and term refi, because now you've got all those debts paid off. It's going to be easier to do that. Your credit scores are going to be higher. That's going to get you lower rates. Rate and term gets you the lower rates. You're not going to need as much equity in that refi, because you're doing the rate and term, and you don't have to worry about those other issues, because you've already protected your family. It's a two-step process. And if you like country music, some of you already understand two steps. Me personally, I like country music, but I don't understand two steps. Next slide. That's the bottom line of what we're doing for you. Now, if you want us to put together a customized total cost analysis, we do this all the time. All we need to know is what your debts are, your mortgage is, and we'll take a look and we'll put together, as you can see on the screen, something called a total cost analysis. And we work the whole thing out for you numerically, so you can see exactly how it will benefit your family. Can I guarantee it's going to benefit you? No. But for most part, it will benefit you. Next slide. All you got to do is make the call. So the question becomes, are you going to take action? Are you going to sit there on your hands and hope that lightning doesn't strike? Or are you going to really make a call? All you have to do is give us a call. Next slide. 800-306-1990, 800-306-1990. We're more than happy to help you with it. All you got to do is get off your hands, take a little bit of action. But if you don't want to, hey, you can see what happened in 2009, 10, 11 to people. We don't want you to be one of those people. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, do you believe homeownership is out of reach? How raising your FICO score may save you thousands. And homeowners associations, do you know anything about how they get insured? We're going to learn today, because I've already learned some this morning just in initial conversations. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. 800-306-1990. S&P 500 now down 21.71. The 10-year Treasury is up 10 basis points. We're probably going to go up another 15 basis points before we see anything turning around. The mortgage-backed securities are down 36 basis points. Tells us that interest rates are going up. How far up are they going? Well, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry. It calculated from actual locked rates across 35% of all mortgage transactions. Yesterday, rates locked at 7.042, jumbo 6.912, FHA 6.832, USDA for those in the rural areas, generally no down payment required at 6.746, and the best loan on the market. Got to earn it though. You can't just apply. That would be the VA loan, 30-year VA, 6.736. That's where they locked. If you know where to find it, you can find it on that super secret website, google.com. The question becomes, why is all this happening? Well, I told you in the opening segment, I'm not going to repeat it, that a lot of it has to do with the Federal Reserve not having a friggin' clue what the heck they're doing. They want to inflict pain. They want to bring down inflation. Lower inflation is good for the bond market. Not good for those of you that have jobs or want to get a new job. The Federal Reserve Chairman Powell proved that he doesn't know what the heck he's talking about yesterday. So we'll have more on that later. Initial jobless claims, which measures individuals filing unemployment benefits for the very first time, remain stable at 217,000. Continuing claims are those that continue to receive benefits after their initial claim rose 47,000. People are, they're hurting. It's already starting. Tomorrow we're going to get the BLS jobs report, expected to show 200,000 jobs created in the month of October, and for the unemployment rate to increase from 3.5 to 3.6%. And I forgot to tell you, even though I did tell you that OBMMI gave us that 7.042 interest rate yesterday, commonly, as we tell you all the time, The government, they're not always that clueless. They're generally pretty clueless on what's going on in the world. So Freddie Mac, they are a government-sponsored entity. They're not really the government. But they did come out and tell us this morning that interest rates are 6.95. And you have to pay 8/10 to get it. Thankfully, you are listening to Ron Siegel Radio because
You know better than that.
yeah, you know better than that. That's the Mortgage Minute brought to you by our friends at Geneva Financial. Whew, I've talked way too much this morning. I like it when other people get to talk and I get to listen and learn. So we're going to talk to Cory Neubauer, Roy Palacio Insurance Agency. Now, they focus on homeowners associations. Now, we talk from as a lender, leading a lending company. I'm talking to a lot of different insurance people all the time, and we've talked to you before about understanding the fire risks and fire areas and natural hazards. But I never thought of it from a homeowners association standpoint. So welcome, Cory.
Welcome. Thanks for having me. Appreciate it.
Tell me a little bit about your niche, because you guys are really focused, a narrow focus, but I didn't realize how big a market it is.
Yeah. So in California, there's about 55,000 HOAs.
Wow.
Which puts it at about 14 million homeowners throughout California. So it's quite a large, niche. And we do focus on, yes, the insurance for the master association. So if you live in an HOA, part of your HOA dues pay for that insurance for the common areas or structure if you're in a condo environment. So, and with the way California is going with fire risk and fire prevention and increasing fires, we used to have a fire season. Now it seems
we do. Fire season is January to December.
Exactly. And we know there's been a lot of new things implemented in the sense of drought to address the drought, less watering, all those things just make it more of a fire environment. So it's definitely getting more challenging.
So how does that going to affect how does that affect me as a homeowner when the insurance is changing? Is that part of the reserves? Is that long term? Is it permanent? Or how does that affect us?
So really, I mean, the best way to explain it would be, your HOA, part of your HOA dues, even if you're living in a single family home that's part of an HOA, there's an insurance component to that. So those rates are going up, just like we've seen interest rates, spike insanely. We're seeing 100, 200, 800% increases. We just had one that went from 30,000 to 250,000.
Wow.
So, right. When you think of those type of numbers and your HOA, most people are already HOA adverse.
Sure. I don't know anybody that says, yeah, I really like my HOA.
Right. And the HOAs, right, where it seems like the homeowners against the HOA, but the HOA is the homeowners, right? It's a corporation that's put together based off of the homeowners within a property. So it's kind of counterintuitive, and the property management companies are just like on a residential thing. The same thing kind of goes of it's an adversary relationship, right? You're
thankless job.
Yes, very.
I mean, I know that in the HOA that we were in, they would come around and they say, who wants to run to be on the board?
Yeah.
And everybody would run as fast as they could the other direction.
Well, it's great pay. It's really great pay to be on the board. You get paid zero.
Yeah.
So at the end of the day, it's like, do you want to do your, live your life, plus then have to assist with managing your own, common area property with, everybody else barking at you when you make a decision.
So you get to get yelled at for nothing, for no compensation.
Exactly. Yeah.
And your neighbors then don't like you either.
Yes. Right. Most board members don't want to be exposed that they're a board member when they're walking through their community, because yes, it's always a negative connotation. So
now I just went through in the opening segment and talked about interest rates and how they almost always drop during a recession. Now, from my standpoint as a homeowner or a car driver, insurance only seems to go one direction. It only goes up. When you're dealing from the you guys are dealing in much, much bigger numbers, right? I mean, my insurance for my car, I don't know what it is. It's hundreds.
Right.
And you're talking about hundreds of thousands.
Correct.
So does that go up and down based on the economy, or is it always a one direction?
You know what? It kind of depends. There's a couple different factors. So, right, if you're kind of like the best way we kind of like to describe is kind of a credit score scenario when on the lending side. If you have a good credit score, you can get the best rate. When you don't have a good credit score, or you have fire risk, or you have claims, you have something that's making you less desirable to the insurance companies, those prices are going to be much higher. So, and yes, in these markets, the cost of repair or replacement is much higher, right? So insurance should be your ultimate peril is fire. Your whole property burns down. What is it going to cost to repair it? Was that less expensive or more expensive 2 years ago? It's going up.
Sure.
Do you see the cost of materials, labor, everything going down substantially over the next
Why not?
everything? So right. So unfortunately, the amount.
Well, according to Chair Powell, it's transitory. Right?
Wait, can you give me the definition of transitory?
Yeah.
There's a lot of big words there that really, I think most people, most people are working hard and seeing that their paychecks are going to interest and going to these other places, and they have less overall. So it's a challenge.
Yeah, it's maybe that's what the transitory means, is it's a transitioning out of my control or something along those lines.
Exactly.
So okay, so now are there a lot? Are you the insurance company or are you a broker?
So we are a farmer's agent. So we are a captive agent for farmers. So we first offer the farmer's product. And if that's not something that fits, we do go to outside markets. So yes, we're the agent or the broker, and the carrier would be farmers. Another carrier would be, you would know Nationwide, you would know Philadelphia. Those are the carriers. So we're the facilitator to get to it. Just much like you're a mortgage broker, you're not holding the loan,
right?
But you're helping facilitate it and then servicing the client. So we service our HOAs throughout their period, their policy period, if they have claims, if they have issues, things. So that's the support that comes along with it. But the carrier is the one that's actually setting those prices.
So when it comes time for renewal, are you going and checking with multiple locations to make sure that the coverage is appropriate, obviously?
So yeah, a big thing with that right now, especially with those prices, with the price of everything going up, you might have a property, let's use an example of a 250 unit apartment or a condo, and it might be worth 100 million. Well, that was last year. It might be worth 110 million now.
Right.
So now you need to go with that coverage, and those carriers maybe aren't offering as favorable rates. So yes, you would go out and shop other carriers to see if you can get more competitive rates, or if you can do a different mix to be able to still satisfy the insurance requirements, but at a more competitive price.
Now, do you have the same issues? I'm assuming you're going to come across the same issues that a homeowner would.
Yes.
Where certain insurance companies are saying, I don't want to insure that location anymore. I'm getting out of that. I know for a while, Anaheim Hills, zip code in Anaheim Hills, you couldn't get insurance.
Right. So a big part, and that really relates to fire and the fire risk, right? We all know what happened up in Northern California with just huge fires that came through. There was no firefighting going on. It just came through and blew through the entire city, right? So a lot of people are thinking, well, hey, I have drought tolerant landscaping, and I've pushed my shrubs back 200 feet. I've done all the things. If you've seen any fire, it happens when we have Santa Ana winds,
right?
And these embers fly miles. So it doesn't matter what you're doing. So yes, there's certain areas. It's based off the fire score. So California. Different authorities create a fire score, and the insurance companies use those to calculate the risk. So Anaheim Hills, Coda de Casa, all Porter Ranch, a lot of these places are very high risk. So now the insurance companies look at this and say, well, there's a lot higher chance of a fire happening, so that makes your costs go up exponentially.
But they're staying in the market though.
Some of them are staying in the market. I mean, I don't know if you heard Geico completely, they closed all their physical offices and got out of here. Farmers is canceling quite a few policies based off risk. State Farm is still writing some, but again, it's at reduced limits. Or a higher deductible. Before, a home deductible might have been $1,000 or $5,000. Now they're saying you need to be responsible for the first $50,000 or $100,000, and then they're putting exceptions in for wildfires. So if a wildfire,
that's going to then hit the from the HOA standpoint, it's going to have to deal with the reserves, is what they're going to be doing for deductibles. We're going to continue this conversation with Cory when we come back, because I find it fascinating. It's something that we don't. It's there, but we don't understand it. So more with Cory Neubauer when we come back. We'll also talk about, do you believe homeownership is out of reach? Maybe it doesn't have to be. How raising your FICO score may save you thousands, all that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Do you believe homeownership is out of reach? Maybe it doesn't have to be. Turns out millennials aren't the renter generation after all. The 2022 Consumer Insights Report from Mind says there's a portion of millennial and Gen Z buyers who are pursuing homeownership as a way to build their wealth, but it may not be exactly the way previous generations have done it. The study explains how they're breaking into the market. Quote, younger generations of Americans are not buying into that dream in the same way that older generations have. A growing number of Americans are choosing to make their first real estate purchase an investment property, unquote. Instead of buying a home and moving into it themselves, some young buyers are purchasing a home so they can use it as a rental. This tactic may be gaining popularity, at least in part, because of the affordability challenges brought about by today's higher mortgage rates. The report mentions how many people in this group are considering this approach. It says, quote, almost half of millennials and Gen Z, 43%, are considering buying an investment property compared to only 9% of baby boomers and 27% of Gen X, unquote. Why younger buyers are buying a home to use as a rental? Well, this strategy allows buyers to continue living in their current location, like the bustle of a city apartment or a neighborhood they know and love where they could not afford to buy. But instead of giving up on the idea of owning a home, they buy a home in a more affordable area with the intention of renting it out. In a way, they're getting the best of both worlds. They live where they want, and they still own a home where they can afford it. Their goal is to generate passive income and diversify their assets. It works like this. In addition to having a rental stream of income, the equity they build in their house will also help grow their net worth over time. Bottom line, if you're thinking about buying a home as an investment strategy to build your wealth, let's chat. And if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you to introduce me? 800-306-1990, 800-306-1990. That's the real-time real estate segment. Again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. So let's chat some more. We're continuing our conversation. Cory Neubauer, Roy Palacios Insurance Agency, is our guest. They are the company. They're the go-to folks for HOA insurance. No, I did not swear. I said HOA. I didn't say HOA or any of those
Or
things.
SOB. Yeah.
Or SOB.
Yeah.
But so let's talk about this, because Cory, I know that when it comes to buying a house, we're all looking at, and especially as leading a lending team,
Total cost.
I look at the total cost. What's it
Yeah.
going to cost for my property, my principal, insurance, taxes, interest, my HOA? But I don't think about the fact that maybe the HOA is a temporary price.
Right.
And if I'm looking at two different properties, maybe do I have to start studying their balance sheet, so to speak, to see when is their insurance coming due?
You know what? That's a great question. The question for you back is, how do you, when you're making that analysis, how do you determine the insurance rate on your side? Because we see it, oh, well, I saw this rater and I should pay $150 a month. What equation are you using? Is it a percentage of the purchase price?
Well, we kind of guess.
Right.
Because what we do is we put in there 0.3%.
Right. That's right.
And then make a call over to an insurance partner.
Yeah.
And say, hey, Mark, what's this going to cost for these folks?
Right.
Right. So that's kind of our, but when we're doing it, we have a good idea that this is what the price is going to be for the next year.
Right.
Right. When I look at my cost as far as the HOA, I might be going into a proper project based on what you shared with me. And, I might be saying, okay, well, it's $130 a month HOA, not knowing that 2 months from now, it's not going to go into my borrowing calculation, but it sure is going to go into my budget.
Right.
That I think you told me before that one of the associations, and doesn't matter where it is, had an increase of $750 a month just for the insurance.
Yeah. Right. So it is. I mean, if you think of the HOA, right, we all think of it as this pseudo thing that's out there, but
it's our mortal enemy.
Yeah, they, just like you said, the reserve is a budget, right? So this HOA has a budget. It's collecting fees, and it's paying for your landscaping, for all those other services, including insurance. And if they're budgeting a certain percentage and that goes up, like we know everything else is going up, there's not going to be money in that budget. So it is going to impact the individual homeowner. So when you are looking at multiple properties, it's good, work with your insurance professional to get that. Work with your realtor. They should be, in touch with an insurance professional and say, hey, run the numbers on these two properties, because you could have one that's, only a couple miles away, but could be a lot higher risk, and it might impact your overall rate.
So as a consumer advocate, what I would be thinking then is, now that I've talked to you, because I didn't ever thought of it before, right? And I don't know if you've ever thought of that on your end, but I know I only helped the first family I helped buy a piece of property was in 1983. And we did have an HOA because it was a condo right below the Orange County Mining Company. So we were able to go there, and I was young then. So we went to the Orange County Mining Company, rolled down the hill after drinking all night and right into our house. But I digress. But the bottom line there is, I'm thinking that, we want to make sure that we've got a good, strong HOA. And I'm assuming that, like we tell folks, that you grow use a Roth IRA to grow your side account and increase your deductible.
Right.
Does that work in the HOA world?
So yeah, in the HOA space, what they're having to do, that, like an example, that one that I gave you, that it's gone up 700 or 800%. They are having to raise their deductibles, right? So that's definitely something individual homeowners can do, because we know that costs are going to continue to increase. So the definition of insurance is a transfer of risk,
right?
Right. As a person, you're transferring the risk.
Very few people ever think about that.
Yeah,
we talk about it, but it is,
right.
That's
It's a transfer risk for a fee.
Sure.
So if you're transferring less risk because you're willing to take on the first $5,000, $10,000, or $50,000 worth of a claim, that's going to lower your insurance premium. So yes, if you can what we call self-insure a larger amount, and you're a responsible homeowner and you're going to take care for your property, then you don't need to pay for as much insurance on that thing. Because with the HOA insurance, especially, that's catastrophic, right? It's not, you have a little leak, the HOA is not going to get involved. But if the whole building burns down, you want to have that backstop to make sure that your asset is protected and it'll be rebuilt. And especially if you're renting the property out, right, you're going to lose income from a rental. So there's a lot of ramifications, and people very uneducated when it comes to the effects of not having insurance within an HOA, because it can impact you. You could be on the hook for, these HOAs are now raising their deductibles to 25, 50, 100,000.
Wow.
So if you're in a condo and you think, oh, the HOA takes care of everything. Well, they do on the outside, but when the whole place burns down and they're only rebuilding to the drywall, and you're now responsible for the fixtures, everything inside your house, because that's how the policy is written.
Sure.
It could be a huge impact. So understanding the makeup of each HOA is important. We had said, right, in the pre-show, we talked about that the HOA is a corporation, and those board members get to decide with agreements from the membership of how to change these rules. So they can make these rules and adjust them. So every HOA is not exactly the same. Just like if you look at your neighbor, they might look great with a couple of cars in the thing, but are those leased or owned? An HOA might have a good financial backing. Their reserves are funded.
Sure.
Versus one that isn't.
Financially sound.
Right. So you want to also, if you're moving into or considering an HOA, you want to make sure that it's a healthy HOA, and that's getting those HOA documents in advance and looking at this. What do they have on reserves? Some have, you've probably dealt with this. If you're going to buy the property, there's a special assessment that needs to be paid off before the property will close.
Sure.
That's a red flag. There's
Right.
something going on that wasn't planned for, and they had to special assess.
Say that again, because a lot of people don't think about that being a red flag, that the buyer beware.
Yeah. So it really is. Everyone falls in love with it, right? They're like, oh, I love the color of the house, this and that. But especially on that HOA thing, where is the financial health? And then that also impacts to what they can do. We have some HOAs that are trying to repipe their entire project, and they need to get a loan. Well, if they don't have money in their reserves, they're not going to get a loan. So now you're going to have to special assess versus leveraging a lower, borrowing money and making the monthly impact less.
And if they didn't get that loan a year ago, then you have to wonder, what's the board doing? Because interest rates were good then, and every one of us knew that interest rates can't stay zero forever.
Right. We were earlier this week, we were just at a industry conference, and they were talking now about how HOAs can leverage the money that they have in reserves to get better interest rates.
Sure.
Right. Because now it's the other way. If you have money, you
lend it out
or get a lot better return on it. So these HOAs are actually able to, leverage that and be more financially sound and fund their reserves, so that when, the whole property needs a roof, they're ready to go, versus, oh, we didn't expect this expense, because everything's dialed in.
Let me ask you this, if there's something that I can learn here, Cory.
Yep.
So if I'm looking at two different properties, and I should be calling my insurance agent before I finalize the transaction, my homeowner's or a prospective homeowner's insurance company.
Yep.
Can I learn anything from the difference of from policy A to policy B? If I'm looking at my budget is $750,000 for the property,
mm-hmm.
and I'm going to put down $200,000. Those numbers probably don't matter in your part of it, from the insurance part of it. But if one property has a $1,200 insurance annual, and the other one has a $2,500 annual insurance.
Right.
When we come back, I want to find out, can I learn anything from that?
Definitely. Yes.
We're going to talk about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. We're going to also talk about how raising your FICO score may save you thousands. All that and more. You can reach me anytime. Our office number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at ronismylender.com. That's ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer, they've got these solutions for you. 79% of all credit reports have errors on them. I have never seen the 21% that does not have errors. And like I've said before, I did the first family I helped with a loan was in 1983. So I've seen a lot of credit reports. What makes you think yours is accurate? I've seen the best score I've seen, FICO, is 834, and that had errors on it. 850 is perfect. So I've seen an 834, my best, and it still had errors. I'm going to guess that yours has errors too. Free credit report audit. You do need to pay $1 to get a specific credit report to tie into the platform, but you get a free credit report audit, creditsanitizer.com. And we're going to have to save raising your FICO scores till our next broadcast because I want to get back to chatting with Cory Neubauer, Roy Palacios Insurance Agency. And if you were listening to us in the last segment, thank you. We appreciate you. If you weren't, shame on you. But we're talking about the idea of what can we learn about a piece of property. And I know that if you buy a piece of property, you're going out and you're shopping, and not to be a gender snob, but mom decides what property we're gonna have.
Happy wife, happy life.
Exactly.
Right? Yeah.
It doesn't matter. I mean, I've been married 35 years. I do not get a say in where we live. Maybe I get to talk a little bit about budget. That's about it. But
you pick the paint colors or no?
No, not a chance.
Okay.
Not a chance. I don't even get to look at the SWOT. Look at the options.
We know our roles, right?
We know our roles, right? So mom's picking that out. But if I get a say and I start looking, I say, okay, I've got two options, or she's looking at two options. I don't get any, but she's looking at property one or property two. And in the background, I just go and I call my favorite insurance agent and I say, hey, what's the insurance rate on property one? And he says, oh, let me look. And they say, okay, well, look, these are the two I'm considering. Property one is $1,200. Property two is $2,500. I'm still the same person. I still have the same birth date for all of them. I still have the same credit risk, and I'm putting the same amount of money down and all that. But one of them is $1,200 and one's $2,500. Cory, can I learn anything from that on my property side?
Yeah. So really what's happening in the past, right? The insurance was kind of an equation, right? You could give that 0.3% and do that. Now with rates skyrocketing in interest rates as well as now insurance rates, that's a variable that you want to be more aware of. So working with an insurance company to find out what those costs are important, because it could be substantially more. Where we used to look at a 3 to 5% increase annually, those are spiking way up. So it's all those variables are things that are now becoming a variable where you just thought were a constant, right? We're like property tax, like we know exactly where it's at. We plug the number in and we're done.
Right.
And really what's affecting those is not just the cost of the replacement cost, but it's that fire risk. So that fire risk is your birth date hasn't changed, your name hasn't changed, your property hasn't moved, but the fire risk, the fire maps that the California Fire Authority puts out have changed. So now your risk is higher in those particular areas. And it could be, we have some properties, HOAs, that it's one HOA with 300 units. In one part of the HOA, the fire risk is lower than in the other part. It could be that close.
Wow.
So think of, you're looking at a house that's maybe only 3 blocks away, but that one house is sitting right up against brush exposure. That could be much higher. So that fire score could be a lot higher, which could impact your rates, not just today, but just as we see everything else going up next year and the year after and the year after. So you want to, fully educate yourself to do that, because the cost of ownership, the insurance is becoming larger than a 0.03% part of your operating cost. So that's definitely a new thing that potential home buyers should keep in mind, especially in the areas, in the Southern California area or any of the high risk brush exposure areas.
Now, does your firm help people with their individual insurance?
Yeah, so we focus on HOAs, but we do write home, auto, and life. So a lot of our HOAs, a number of them are our clients, our personal clients as well. So yes, we do home evaluations all the time. We work with a number of realtors that send us over a couple of addresses. So if you're a realtor out there and you need, hey, I have a client, it's a great value add. If you can say, here's your offer and here's 2 quotes of what it would cost to insure these properties. So it's a quick thing that we can do. It's a free service that we offer. And it does help a lot of realtors, because it can steer a direction of a conversation of which way to go.
So I'm going to share a little bit with you, because we're on the same exact boat as you're talking about, Cory. Is we look at this and we say, you have to.
Yeah.
Whenever we get a contract for any one of our clients where we're helping with loans, we automatically send it to an insurance agent, because for real simple is that we don't want to get to the 11th hour of the process and say, oh, we were supposed to do that. Well, we put it into the file just in case.
Yep.
Right. It's
just
just
a backstop.
There you go. It's a backstop. And you just want to make sure that that's there. If your agent isn't doing that, if your lender isn't doing it, we do it as a lender. We don't wait for the agents to do it. We just do that as a lender and say, something, it's got to be there. It's gonna come up. So make sure that you're dealing with it. But you also then know, and I don't know if you're allowed to share the information. Is it a strong HOA or is it a weak HOA? Should I be moving in there or not?
Yeah. So, really with that's during your disclosure period where you'll get the governing documents, and that's where you want to look at those, right? And a lot of times people just get these documents and they're long, just like loan documents, and they don't read through them. The budget is an easy document to look at. It's usually 2 to 3 pages, and you can really kind of see the financial health of an HOA, right? If they're only funded 25% to reserves, that means they're way behind. Like, we like to see 60 to 80% reserve. Some HOAs are very proud that they're 100%.
What does that mean, though? What does that mean? A lot of us, we don't look at it because we don't know what we're looking at.
It's really, the reserves are for what needs to be repaired, right?
Okay.
So if the roof got a 30-year life and it's going to cost X to replace it, well, you're budgeting a reserve portion every single month to be able to, in 30 years, have the money to replace that. So
is the reserve going to say that reserves should be, 100,000, and then we see on there that the balance is 50. Is it going to be that clear to me?
Yep. It's very clear. Right.
Okay.
And it gives you a percentage to funding. So,
okay. So that.
Yeah.
So if it says 10, we know that we've got a problem.
Right. Right. And right. If you need to, it's right. And that's where special assessments come into place, right? Because if you don't have money in the reserves to keep your property maintained, the HOA property maintained, they have to go out to the membership.
That's a risk.
Yeah, that's a risk. So, right. The financial health of that HOA, as well as, the fire risk, are going to become more and more a factor in future decisions. Especially,
we've got about a minute left, Cory. Tell us how we can get a hold of you.
Sure. You can reach out to us. I think Ron's got our information up there, but our website's www.rpihoa.com. So you can get all our information there. And we're happy to help with any type of questions you have. We work with a lot of large property management companies, but we also work with tons of individual homeowners. So we've seen it all. My father-in-law started this agency 30 years ago, and we're one of the only scratch agents that built our book from the ground up. So every client we have is because we've earned it. So we're proud of that, and we're trying to, we do the right thing. So we're not high flyers. but we do the right thing, and we're going to be here, and we stand behind all of our work.
Beautiful. Appreciate it. If you want more information, just give me a call, 800-306-1990. More than happy to put you in touch with Cory Neubauer, Roy Palacios Insurance Agency. And again, it's rpihoa.com, rpihoa.com. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Just push me over the limit. I'd like to call him something